Hello, everyone, and welcome to another episode of the Culture Hour. Today, we're going to talk more business than culture. So put your hats on if taxes are still on your mind. We got two deadlines coming up that we're going to talk about. But until we get in, my name is Shelley Smith, and I am brought to you here by the Culture Hour. And my cohort founder of the Culture Hour, Elizabeth Valise, is out on site today, and she'll be joining us in the next couple of weeks, and we'll get caught up in something juicy, I'm sure, juicier than taxes. Not that taxes are not important, but you know, they're not super sexy. So, but let's bring back a guest that you've seen here before, and I got great comments on her. It's Nany Gonzalez, who is the owner and founder of More Consulting Services. She's a back-end service provider that knows everything that there is to know about the bookkeeping, finances, and more. But today, there's two deadlines coming up, and Nany's going to correct me if I'm wrong. We've got September the 15th, which is the corporate tax year for filing late. Is that what you said?
Mm-hmm.
The extensions. And then October 15th is the individuals who did their extensions and filing late. So Nany is getting flooded still, as well as I'm sure some of the other CPAs who might be, and bookkeepers who are watching right now, with questions about what can I do and what can I not do. So today's topic is going to be about tax planning. Visualize that coming in and out. Are you getting the message? Kind of cool, right? Because I don't know how to edit that into a video, so we just have to imagine. So I welcome again Nany Gonzalez. So Nany, you and I were talking before the video started. What are either some top tips when it comes to tax planning? Now, obviously, if you filed an extension, it's too late for you to think about this. But as we move into the next year, what are some top things that we need to think about when it comes to tax planning?
Sure. So one of the biggest challenges that I'm coming across with individuals that did an extension and they're still trying to get that wrapped up is that, hey guys, we're already July 31st. We're in the month of August. So if you have not met with your preparer to go over the most important things, and that is, what are my exemptions? The IRS put out a couple of months ago a new W-4 form, and it's taken into account people who work two jobs. Because if you're claiming the same thing on both jobs, you're actually double dipping. Because look at it this way, at the end of the year, there's only 5 people in your household, right? Husband, wife, 3 kids. But if you're filing 3 exemptions and your husband or wife is filing 3 exemptions, then that's actually making it seem like your household is 8. 3 plus 2 parents makes 8. So at the end of the day, on your formal tax return, you're only 5, but you've been claiming 8, meaning that you haven't had enough taxes taken out. And then with all the other changes that are going on, for example, the long form is going away. It's going to a standardized across the board amount that you're going to get, whether 1 child, 5 children, 20 kids. So that's really going to affect the way that comes into play. Also, unreimbursed expenses. A lot of people take advantage of, hey, my company only gives me 40 cents per mile. A lot of banks do, versus the standard 54 cents. Well, generally we recoup that on the Schedule A form. Now that's kind of going away. So that not kind of, it's gone away. So now what are you going to do? These are all these little deductions people are so used to getting, and now that's not going to happen. So if you have not sat down and looked at your last pay stub, brought your wife's pay stub or your husband and did a comparison to last year where you are, you're going to be in for a great surprise. Unfortunately, 2 days ago, I had to send out an email to a client that I've been working on for several years and say, hey, buddy, you cannot make $84,000 in the year and only pay $1,100 and think you're going to walk away clean. So while he's going to have to pay something for 2017 and we can minimize the exposure for 17, there's nothing I'm going to be able to do for 18. He needs to go ahead, pay extra in, save up some money so he can take care of it. So the few tips that I definitely suggest: review your W-4 form. Go to your HR person, pull it down from offline. Go to your bookkeeper, go to ADP, Paycheck, Southern Payroll, whoever you use to make sure that you are claiming the right amount. Don't rely on, oh, I've always gotten a refund, so I'm not worried about it. This may be the one year that you're going to have to pay. There's too many changes that have gone on. One of the other things that I try to tell people is, just because you bought a house doesn't mean you're going to be able to write everything off. Again, the forms have changed. The allowances have changed. So you want to make sure that you do the planning now versus come April 15th of next year, or heaven forbid, you do another extension and you're finding out in October that you have to pay $5,000.
Yep. That was a lot, and I love that. And certainly don't want to make light of it, but clearly we can't claim our cats and our dogs. And and if there's someone living in our shed and we don't know about it, we can't claim them. So we've got that off the table. No, seriously. So it sounds like if we didn't do it this year, shame on us, because there definitely has been a heightened publicity, awareness, ton of conversations of the unknown for that. But as we prepare, we can dig back in, maybe some things that we didn't look at. But as we move forward, kind of what I heard was meet with your preparer, the person behind the scenes, or look at last year and said, I deducted these categories. Go to the Nanys of the world, like I did with my Nany, and say, okay, I claimed this. Is this still, can I still claim it? Can I not claim it? Yes, right. No. So I have in my head, and then, or it's a partial claim, or what is this impact going to be? Which, you know, gang, I have to tell you, if you're not meeting with your bookkeeper or your CPA once a quarter to say, where am I? You're going to have a shock at the end. So, you know, you can't go back and clean up an entire year when it's done and over, because you may not track it. And you certainly don't want to get in and have to go to your calendar and go, what did I do? Where was I at? Who was I with? And so it's a painful part of life, but if you've got to do it from a personal standpoint. And then obviously for the multitude of individuals that have small businesses, whether you're an LLC, an S Corp, a C Corp, or what have you, you do have to be mindful about how you are mining your business and your taxes. And it is better to pay a little bit along the way than to figure out where that big O check is going to come from. Been there, done that once, never again, right? Never again.
That's right.
I listen to my Nany.
Yeah, well, one thing I want to chime in that I want to make sure that we do an emphasis on is for those individuals that have a W-2 income, meaning you don't have a side hustle, you don't have a Schedule C, you don't have your own little business. Even though I'm going to tell you right now, this is the best time to develop that little side hustle.
There's all kinds of articles about side hustles. Yeah.
Side hustles. Put your side hustle into your full business, which is how this all started, was a side hustle. And here we are 7 years later. But at the end of the day, you need to go back to your employer, because that form 2106, unreimbursed employee expenses, if you are literally incurring expenses that are because you're bringing revenue to your employer, then you want to have that conversation and say, look, I'm not going to be able to write this off. We need to come up to a happy medium, a gas card, a mileage log. You know, you want to go back to them and say, hey, I'm incurring this much with B&I meetings or PWN meetings or any associations, and try to work that out with them. They get the full deduction, and now you're going to lose out on it. So why have it out of pocket? If you're working with somebody or working for somebody, you definitely want to have that conversation with them to be reimbursed.
Love it. Great. That was a whole lot of information in a short amount, and hopefully people are running to schedule their appointments with their go-to person. And in all seriousness, wow, I'm kind of tongue-tied here this afternoon. You need to meet with your person. And when I say your person, you've got to trust your person to give you the best guidance. And if they're not calling you and saying, hey, we haven't met, you need to call them, because it's obviously on your onus, but you need to have a trusted advisor who can help you through these sorts of things, regardless of how, like she said, whether you're a W-2 or whether it's your own business and responsibility. And oh, by the way, you should, call individuals such as Nany or her staff into your businesses and tutor your own employees to be smarter about their finances, because finances cause crazy amount of stress. Right? So it's a way that we can have higher engagement even within a company culture when we give financial assistance. And when I talk about financial assistance, education education on how to manage your money. So when I talk about wellness, I'm talking financial wellness. It's a great thing to bring into a company culture. So, you can call Nany for stuff like that, and she'll be happy to come in and give you a talk. The other place that you can tap into Nany's knowledge when it comes to stuff like this and financial wellness within your company is to join the Curators in Conversation membership too, because there's a platham of information, and you can tap into Nany directly about some of your questions and some of the ways to bring in financial wellness and reduce stress around finances to your entire team. So just another thing to think about when you tuned in and you're like, wait, this is the Culture Hour. Why are they talking about planning taxes? Because it affects literally everybody, and it causes stress, and stress really kills the vibe of your company culture. That's where the tie-in is. So
Right.
I thank you, Nany, for your expertise again, and I thank you for making sure that my books are straight and that you keep me in check, and I appreciate you so much. So until the next time, we are going to tap into Nany's knowledge when it comes to some other resources too in a couple of weeks, and take a dive into another fun topic. But until then, my name is Shelley Smith. So on behalf of myself and Elizabeth Valise, we thank you for tuning in for the Culture Hour. And please remember and never forget, culture matters. If you've got questions, if you've got a guest that you would love for me to talk to have on, all you got to do is send me an email, send me a note, send me a question. Until then, bye from me and goodbye from
Nany Gonzalez.
All right. Thanks, everybody. Peace out.
Bye-bye.